Is it safe to buy the dips? Despite Friday's down day, some of the larger banks reported earnings and seemed to say to the market, "What banking crisis?" JP Morgan, JPM, rose over 7% in a day and finished near the top of its trading range for the day. The S&P 500, SPY, had its fourth winning week in the last 5. I'm still looking for it to challenge 420 before a pullback. If it breaks 420, look for the 2022 April high as the next target. Everyone keeps talking about and warning about a recession, but tech stocks are on the rise, shrugging off the potential for additional rate hikes. In several issues of this newsletter this year, I've discussed how some tech companies have already come off their bottoms and rallied nearly 100%, and the Nasdaq 100, QQQ, is already in bull market territory, rallying 20% off of its October lows. So, the question is, can we feel safe buying the dips? For example, Microsoft, MSFT, fell 1.3% on Friday. There's a lot to like about Microsoft. It's expanding its gaming division, it's getting more publicly involved with artificial intelligence through its partnership with OpenAI, the makers of ChatGPT, and its enterprise collaboration services like Teams continues to take market share away from its competitors. But I'd argue that Friday's 1.3% dip is not the pullback I'm waiting for. The chart above shows a series of higher highs and higher lows, but we're still at the top of the channel and I'd wait for a bigger pullback, especially since the S&P 500 also looks like it could be coming into resistance. While there are many calling for new market lows once the recession hits, and to get out now, you have to look at what the market is giving you and adjust your position size based on risk tolerance. I'm not going to sit on the sidelines, waiting for a recession to pass when there are companies and ETFs out there with this type of performance over the last 6 months. I'm buying the dips until the pattern changes. For example, the QQQs are holding above the 50-day moving average. I'd look for a bounce off that as support, and leg into a position, protecting the account in case the pattern changes with the next Fed rate hike in May. Of course, this entire narrative can change with some tech earnings reporting this week. It's Monday, so that means it's time to review the reports that have the biggest potential to move the market this week. We have a number of Fed members giving speeches throughout the week, so that can always cause blips of market movement. Here are the major reports being released this week. For more information on the reports, this story and others like it, visit tradersreserve.com.